What is going on, guys? This is KOJOFOREX aka GBP Less. Nah man, I need to get my energy up. What is going on, guys? This is KOJOFOREX aka GBP Legend aka Market Sniper aka King of Blues. In today's video, I'm going to be teaching you guys the importance of market structure. Yeah guys, I really appreciate you all for being a part of this channel and helping it grow to where it is now. We're currently around the 12.4k subscribers, which is pretty impressive looking at the time span in which I started getting consistent with my YouTube. I mean, I've been big on Instagram and then Telegram, but I was pretty much not even present on YouTube at all until I decided to give YouTube some level of concentration, and then coming on here and teaching you guys all I know in the forex market, right? And then through thick and thin, and then getting a little bit consistent at this, I love and appreciate the support you guys have given me. We're currently growing, right? So currently at 12.4k, which I am extremely grateful for, right? So for us to just keep the energy up and then just keep the consistent going, you know what to do. You got to like and subscribe to this channel and all videos that I post, right? And then just keep the energy up so that I can be able to get motivated and then be posting consistently here, teaching you everything that I know, right, on a daily basis or maybe a short-term interval. Yeah, so with that being said, anytime I want to talk about anything on the forex market, strategy wise, structure wise, anything wise, I make sure to go online first, like YouTube, and then search about that particular topic and see how others have broken it down or sort of like put it out there, right? So I've got a lot of people coming up to me and asking me, Kojo, when are you going to do market structure video for us? We need something on market structure and stuff like that, right? And I've been a little bit reluctant on that because any other thing that I see on YouTube talking about market structure is totally like bullshit, right? I see that people don't even know what they're talking about market structure. All they're probably telling you is how to identify trends in the market, talking about lower high lower low formation or high 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 low formation. That is pretty much basic when you're talking about market structure. Market structure goes beyond that, right? Market structure is a strategy on its own. It can blow your mind. It's going to literally like change the whole game for you. So I gave it a little bit of consideration, and then I thought, like, I mean, and why would it not be worth coming on here and then teaching my people, since they've been like supporting me through thick and thin since we started this channel and then keeping it growing, right? So today I decided to fully show you everything I understand about market structure and how it can elevate or change your trading game totally, right? Change your trading game totally. So this video is going to be a short one, right? We're not going to waste too much time. We're just going to go right into the chart while I break down market structure for you guys. So stick with me for the next couple of minutes and I'll break down into details market structure for you guys. Yeah guys, so like I promised you, we're going to go into the chart and then talk about structure and then understanding structure as a general basis and how it can be able to influence our decision making in the market, right? So for the most part, like I told you, when I come on YouTube, I mean, to talk about any kind of a topic at all, I make sure to go online and see how others portray that topic or teach it out before I make my bit of coming in what I know and then how I've been using that thing for a long time. So talking about structure wise, there's some particular kind of a way in which people denote it. I mean, they are not totally wrong. That is just the general basis in which people see structure to be. But I tell you what, there's a little bit of tweak to it that can change the whole game when you're talking about market structure, right? So for the most part, when people are talking about market structure, they are talking about the fact that the market doesn't go all the way up, right? It does what? Go up, create some waves, go up and create some waves, go up and create some waves, or either in the downtrend where it's coming down, push to another high, lower low, lower high, lower low, lower high formation, right? So this here becomes that high low formation, then this one here becomes that lower high, lower low formation. So structure wise, people are always looking at the fact that the market is going to create a high and then a low and then another high and then a low. So they are always looking at this point being like that high. So they are always concerned about how the market is going to react when it comes to this point, and then once the market breaks this point, it should go up and then come and make a retracement, right, and then continue up and stuff like that. Yeah, that is how the market typically is portrayed when we're talking about structure, and that is what you need to know. But you must understand that the market doesn't always move in that nice fashion or nice formation of just consistently creating high low formations in the market. So how can you look at structure differently? the way to think about structure is that you're always looking at the market at any turning points, right, or any previous turning point. Ask yourself, whatever might have stopped this thing from continuing further up could potentially stop it again, right? Listen to what I said very well. Whatever might have stopped the market from going further up or further down could potentially stop it again. Once you understand the market from this point of view, then you understand typically how to use structures on the market. So what do I mean? Let's say the market is waving up like this, it gets to this point and then it drops, right? It does its own thing, right? Consolidates and then rallies up again. So as far as it's rallying up again, if it gets to this point where it was previously stopped from going further up, you have to think about the market structure-wise and see whatever stopped this market from going further up could potentially be there to stop it again. So you want to particularly be interested in this area to see how the structure holds, right? If the structure is going to be broken on the upside or the market is going to literally run back down, right? If you start thinking about the market this way, it's going to change the whole game for you, right? So as the market is even running back down like this, I taught you guys how to apply Fibonacci, right? So you typically want to measure what from point A to B. If you haven't watched that Fibonacci video, then it means you have to go into my previous video to watch it, because it's going to be an added up lesson for you, right? Point A to B, retracement to the 51.8 or 78.6, and then we could potentially maybe find what a trader will rally on the upside. Other than that, if this thing decides to be a total reversal and then smash to the whole Fibonacci levels, then what do we need to also be concerned about? These other level here, right, which will also be determined as another structural point in the market. So we are also going to be interested here to see, as the market approaches this point, is it going to hold here, right, or is it going to bounce off from this point and go up? So whatever stops this market from going further down, you have to think about it that it could potentially also stop this level from going further down. But there's a criteria or the preamble things to look out for around this area, which is what I am going to also point out to you guys, right, to some extent of detail, so that you know what to expect anytime the market gets to this kind of level. So as this one also bounces off, right, and then this market gets to this point again, you're also asking yourself the same question, right, the same question. And then if this point in time, let's say all things being equal, get broken, right, the market approaches another level, you have to what, zoom out into the left side of the chart and see where structural point of view something may have stopped. Let's say all things being equal, all the way back in some period in time, the market has stopped previously around this point here, right? So you want to go back into the left side of your chart, zoom out, and then ask yourself again that whatever that might have stopped this market from going further up around that area would also potentially stop this one from going. So once the market hit that point again, you want to apply the same structural point of view and see if this market is going to hold here and then bounce down, or typically just break through and then keep going up, right? So with this simple idea, it can be a whole game changer for you in the forex market. Let's see how we can apply that in the real market sense, using Euro NZD as a backtesting currency pair. Right, let's use Euro NZD as a backtesting currency. I told you guys that this video is going to be really short one, so I don't plan on wasting too much time, right, and talking too much in this video. So let's go into Euro NZD and then see how we can be able to use structure to find some entries, right? If we look at Euro NZD around this point, right, we can see that this was like the last low in Euro NZD. This point here was the last low. Here was the last low, and then it started like rallying up and hitting this point. It's in this point. So after hitting this point, what do we see? We saw the market retrace or pull back, right, some portion of the move before continuing back up. So as a typical trader, how do you think about this formation if you're looking at this market in this way? Number one, we hit this level, which is this low here, so you need to identify that, right, in the market as your low, and then this one hitting that highs. And then, like I told you guys in the previous Fibonacci video, you would only look at the market as a retracement if at least 20% of that move has been pulled back, right? So even in this market, as far as this one has been pushed down up to this point, you can be able to start determining that retracement point in the market. So how do you do that? Again, I taught you guys in the previous video. Like I said, if you haven't watched it, go click on that video and then watch to understand Fibonacci. So typically I would plot my fib level from A to point B, right? Point A to point B, understanding that this is what fib level A, fib level B in the market, and then we are just making a retracement. So I would be number one interested in these zones, right? A 50%, 61.8 and the 78.6. If you look at this market, you can clearly see that what it held specifically on the 78.6 retracement level. If it hadn't held on the 78.6 retracement level, what do you think I would have been interested in? I would have been interested in seeing how market structure reacts around this zone, because by then it had come back to that previous low, and I would be seeing if the market is now going to hold on here as a double bottom and then go up, or typically break this and then just keep the trend on that downtrend it had established previously, right? So thinking about it that way, it means that in this kind of scenario, what could have given us an entry onto the upside, that is using Fibonacci as a confluence to take this decision or to take this trade, right? Prior to using Fibonacci as that confluence to take this trade, prior to using Fibonacci as a confluence to take this trade from this downside, which we have or which I have shown you, then we are approaching this point in here, which is on the upside. Then what do you need to do? What do you need to do next? You need to also establish that high, right? Which is like this place being the last high in the market, right? So as this market is rallying on the upside, you are asking yourself, how are we going to react when we get to this point? And you can clearly see that we didn't even make it up to that point and the market started rejecting, right? So if you understand some of the typical candlestick patterns, you start seeing some reversal formations here, and that could even give you a second entry for a sell, knowing for a fact that this market isn't going to trade above this region, and you can find a perfect entry and then short this thing back down again. Shorting this thing back down, you can see where we made some level of choppiness around this area while we are still maintaining here as our low, right? And then here as even our most recent low in the market, right? So you can see that here again, market structure where we tapped on the most recent low and then pushed up again. But upon retracing from that most recent low, we want to also be interested in how this level also holds again, right? So it's just like continuous breakdown from point to point and turning points in the market to understand structure, right? It's as simple as that. Continuous breakdown of turning points in market to understand structure. Here you can see that what we had a very strong bearish candle run through that last point in the market. So there you can know that, well, we cannot be necessarily saying we are going to reverse from this point and then this structure just got broken. So a new low has been formed. So once a new low has been formed, we want to change our bias and not really be interested in looking at this previous low out here again, but looking at the next formation of these waves in the market. You could go into the left side of the chart, like I've told you, to see where this new low could potentially stop, right? If you zoom all in on your chart, you could get some clues about where this new low, which is here, could potentially stop, right? If you look at this, you can see that we can start getting some clue from here where this one had a little bit of a push on the downside, choppiness, and then rallying all the way up. So within this area of margin can be like a reason why this market would come down and then stop within this what area determined here, right? Yeah, so upon creating that low, then we are also interested. Okay, so you can clearly see that we hit that point, which is here, and then the market just bounces off from there, right? Bounces off from there. Upon bouncing off from there, still we are maintaining here as our last high in the market, right? Again, we don't make any effort to reach that point, and then we start retracing back into this structure level again. Upon hitting the structure level, the scenario is to maintain. We want to see how the market reacts here and see if it's going to typically break this level and continue down or hold off here, right? But the preamble to look out for when we are talking about structure is that you want to always look at if the market is going to close strongly beneath that region, that structural point. What do I mean when I say close strongly beneath that structural point? Closing strongly beneath that structural point typically has to do with if the candles is going to be a strong body closure and not a wick, right? So you may sometimes have at the structural point a wick run through, but the body is not going to close strongly. But we are talking about where a body of the candle closes strongly and closes beneath it like that, right? and that way we can be able to say that the structure is likely to be broken. But if we have a weak run through, push back into the range, then we can be confident to say that it's just what a minor push on the downside or a manipulative move, but the structure is still likely to hold and the market is going to push back up again, right? So looking at the next point of structural points in the market, where we can like put this level here as our new high. Again, the same scenario is applied. So if you look what is happening here, what can you see, guys? The market just comes back into that range, wicks it up with a little bit of wick, right? Doesn't close above it, right? No strong body closure, and then literally like start pulling back down again, right? And then if we're looking at again at this point again in the market, which becomes our new level of low, you can see that structural wise, after hitting this level of low, the market doesn't even approach this market structure before it starts to push up, right? With a strong bullish candle, then we can be able to find a retracement if we so wish to find an intraday trade to catch this market back down, right? So again, you understand from that fib level that I showed you guys out, here is now going to be our point A, is going to be our point B, and we could identify this as a 50% retracement move on the market to even catch this market back down. So looking at market from that structural point of view is as easy as A, B, C, if you understand what you're doing, right? So all you have to do is that you have to apply structure as a confluence to other decisions. It doesn't become the sole decision or determinant in taking trade or making decisions on the market, but it can add up to your knowledge, right, significantly to make decisions in the market, right? If you look at this point again, look at how structure played a role here, right? You can see that we hit this point as a low, rallied up, came back all the way down, played a strong role in holding off here before this big push on the upside again, right? All has to do with understanding of structure in the market, right? All has to do with understanding structure in the market. Again, we can see another typical scenario around here again, where structure played a role in determining what this long here, right? So I apply structure in all scenarios in the market. So here you can see that here we had a little bit of a push to close beneath here, but that wasn't a significant close because the candle started actually trading from the top, not really beneath here to close beneath like that, right? So it just was a manipulative move that pushed the market a little bit further down. You don't always get the market acting perfect here, but quickly you can see that we ran back into it and then rallied back up. So structure could have also helped us to find another entry here for a buy, right? So yeah, I told you guys that this video is going to be really short, and I've taught you guys the in and out about understanding structure and then how to apply it in your trading. I hope this lesson helps you guys and then betters your knowledge into how to find sniper entry in the market, right? I'll see you guys again in the next video. Hope you enjoyed this, and if you did enjoy it, make sure to smash the like button so that I can be able to build up on these knowledge subsequently, and also make sure to click in the link in the description to join the KOJOFOREX Telegram channel. These days I'll be trying my best to even drop analytical videos, and not just analytical videos, but my bias on the Telegram group, as well as giving you guys free trade signals so that you can be able to make money for yourself this December and chill all out, right? So I'll see you guys, like I said, in the next video. Yeah guys, so if you like this video, you know what to do. You got to smash that like button so that the YouTube algorithm picks it up and then it does well. Also make sure to click on the link in the description to join the KOJOFOREX Telegram group. And then number one important thing is to make sure to subscribe to this channel so that we keep it growing consistently, right? And then even click on the bell notification so that anytime I drop a video, you'll be among the first people to watch it. And make sure to comment, right, so that give me your perspective of what you think about everything I've taught you, right? Also keep it real with me by following me on all social media at KOJOFOREX, KOJOFOREX, Facebook, Instagram, Twitter, whatever it is, and let's just keep interactive out there, right? Yeah. And then subsequently I'll be dropping some more content that is like strategy wise, right? In the next couple of days, all through to the end of this year, I'm going to be dropping on a single day basis strategy upon strategy upon strategy that's going to elevate your knowledge in the forex market, right? So if you like this, like I said, smash on the like button, comments, let me know your ideas, and then make sure to follow me and then click in the link in the description to join the KOJOFOREX Telegram community, right? Because I've been dropping a lot of trades there for free, right? Monday I dropped 3 trades that made a lot of people so much bread, right? I may be able to like even chip in some of the profit people made on this screen so that you guys know that I'm not shitting you. People's been making so much bread from that channel for free, right? So if you want to be a part of that family and then make a lot of money for yourself, then you got to click in the link in the description, right? So with that being said, I'll see you guys in the next video.